Welcome back to India Business Insights. This video is part of our new series where we do 3 to 4 updates on various industries. In this video, we will look at what is happening currently in the conventional power sector. Introduction. Overview of power sector. The power sector's dynamics are evolving towards energy security, meeting rising base load and peaking load demand, and the adoption of low-cost energy storage solutions to integrate intermittent renewable power. This provides a blend of opportunities for developers having a presence across all modes of generations and will continue to provide affordable and sustainable power. Regarding the economy, RBI has estimated GDP growth to be 6.6% in the current fiscal year and a projection of 6.9% in Q1 FY26, which is primarily driven by robust economic activity and expectations of higher government expenditure in coming quarters. Power sector analysis Q3 and 9M FY25. The power demand for the country grew by 4.5% in the first 9 months of the current fiscal year 2025. In the third quarter, the demand growth was moderate at 2.7%, but this is on a higher base of 9.9% growth witnessed during the same quarter last year. However, structurally, we continue to expect strong power demand in the medium term. The peak demand witnessed in this quarter was 224 GW in December 24 versus last year during the same quarter. The peak demand was 220 GW. Overall, for FY24, the previous year, India's peak demand reached 250 GW as compared to 243 GW in the current fiscal year. In line with power demand growth, the country's generation increased by 5.3% year-to-date in FY25 and 3.7% in Q3. All India thermal PLF stood at 66.7% in the quarter as compared to 66.9% in the corresponding quarter last year. The share of intermittent renewables in the total generation stands at 12.4% during the quarter. Talking about the generation capacity, the total installed capacity in the country has reached 462 GW and the country has added 20 GW so far in this current fiscal year. The total renewable capacity addition in 9 months in FY25 stands at 19 GW, dominated by 16 GW of solar installations. Coming to the quarter, the net capacity addition stands at 9.3 GW, which compares with the 2.9 GW added last year in the same quarter. Capacity additions in the quarter were driven by a renewable capacity addition of 7.9 GW, dominated by a solar capacity addition of 7.1 GW. Moving on to the bidding activity, in the current fiscal year, the total utility scale auction of approximately 38 GW capacity was bid, which is continuing the pace that we witnessed last year, and for Q3, the total auction that took place was 16 GW, 9 months was 38 GW and Q3 has seen 16 GW with a notable dominance of customized solutions of hybrid and FDRE projects. Concerning coal, API 4 coal prices are currently ruling at $100 per T as compared to an average price of $110 per T in Q3 of FY25 and $116 in Q3 of FY24. Within the domestic market, sufficient steps are taken to keep a robust domestic coal supply. We have seen a low e-auction premium for domestic coal procurement, especially in Odisha and Chhattisgarh. Coming to the merchandise markets, India has seen strong volume growth. The quarter gone by witnessed approximately a 16% increase in total cleared volumes at the power exchange, while day-ahead volumes increased 14% year-over-year. The higher volumes due to higher firm power availability and better hydro generation have led to moderation in prices. Key players and their performance in Q3 and YTD. Let us have a look at what the key players have been doing in this space. Competitive landscape. Company, NTPC Limited. Market position, market leader in thermal and expanding in renewables. Key developments. Listed NTPC Green Energy, major solar wind hybrid projects. Company, Adani Green Energy. Market position, largest renewable player. Key developments, expanding battery storage, secured large solar tenders. Company, Tata Power. Market position, strong renewable portfolio and distribution presence. Key developments focused on EV charging and battery storage. Company, JSW Energy. Market position, aggressive expansion in green energy. Key developments, acquired wind and solar assets for rapid scale-up. Company, Reliance Industries. Market position, ambitious plan in solar manufacturing. Key developments, investing in hydrogen and large-scale solar farms. Company, Power Grid Corporation. Market position, dominant in transmission. Key developments, major investments in smart grids and inter-regional connectivity. Merger and acquisitions, M&A and fundraising. Amongst the large companies, the key highlights of fundraising activities and M&A activities have included: number 1, NTPC Green Energy IPO success. Raised $1.5 billion, reinforcing investor confidence in the renewable sector. Funds will be used for expanding solar, wind, and green hydrogen projects. Number 2, JSW Energy's acquisitions. Acquired a 2 GW solar wind portfolio from a foreign investor, increasing its renewable energy footprint. Number 3, Tata Power's strategic partnerships. Collaborated with global battery storage firms for grid-scale storage projects. Number 4, Adani's expansion. Raised $2 billion in green bonds to finance renewable expansion and transmission projects. The company is a part of JSW Group. The company's third quarter theme was focused on strategic acquisitions and expansion. In December 2024, the company completed the acquisition process of O2 Power, a renewable energy platform with a capacity of 4,696 MW at a deal value of Rs 12,500 crore. With this, the company got access to O2 Power's assets spread across 7 states and a capacity of 5 GW plus in various stages of development. The majority of O2 Power's projects are tied up with high-quality off-takers such as NTPC, SECI, SIUN, etc. In January 2025, the company acquired 125 MW of wind project from Hetero Labs and Hetero Drugs Limited at a deal value of Rs 630 crore and with remaining plant life of 15 plus years and a blended tariff of Rs 5.22 per unit. JSW had also bid for the KSK Mahanadi Power Company under the IBC proceedings and has received a letter of intent for a 3600 MW thermal power plant in Chhattisgarh. The company has added 800 MW of organic renewable projects in the quarter, which is up from 377 MW in Q2. Currently, it is also constructing a 1.1 GW power project for SECI and Group Captive. The company's total under construction capacity is at 7.8 GW, with signed PPAs and 8.3 GW of capacity for transactions under acquisitions. Overall, JSW has a locked-in generation capacity of 28.3 GW. For power generation, the company's net generation was up by 10% year-on-year basis to 6.8 billion units in Q3 2025. JSW Energy's thermal generation was also up by 8% year-on-year in Q3. On the financial side of things, the company had a flatter revenue curve due to incremental sales from the new RE capacity addition. The company's net debt at the end of Q3 was over 26,500 crore and a cash balance of around 5,000 crore. The company had spent over Rs 6,200 crore on capex in 9 months and expects the entire capex to go over 10,000 crore for the current financial year. NTPC, formerly known as National Thermal Power Corporation, is an Indian PSU that is directly engaged in generation of electricity and other allied activities. NTPC is the largest power company in India with an installed capacity of over 76,000 MW. During the quarter, the company made significant progress towards cleaner energy by carving out NTPC Green as a separate entity and incorporating a wholly owned subsidiary under the name NTPC Parmanu Urja Nigam Limited for undertaking a nuclear energy business. The company has also made significant advances in green hydrogen. NTPC commissioned a green hydrogen mobility project at Leh comprising a 1.7 MW solar plant with a green hydrogen filling capacity of 80 kg per day and 5 hydrogen intracity buses. The company has also started a solar hydrogen micro project for the Indian Army in Ladakh, providing 200 kW of power year-round. NTPC Renewable Energy Limited, a subsidiary of NGEL, successfully secured 1000 MW in a solar power auction by Uttar Pradesh Power Corporation Limited at a tariff of Rs 2.56 per kWh. Additionally, NTPC REL won 500 MW of solar capacity in a SECI auction, which also includes the installation of 250 MW per 1000 MWH energy storage systems at a tariff of Rs 3.52 per kWh. NTPC REL also won 300 MW capacity in a NHPC auction, which also includes the installation of 150 MW per 300 MWH energy storage systems at a tariff of Rs 3.09 per kWh. On the financial side of things, the company has seen improvements in its performance as well as the performance of its subsidiaries and JVs. The company's subsidiaries earned a profit of Rs 1,908 crore for 9-month period ending 31 December 2024. NTPC received a dividend of Rs 1,309 crore from JVs and subsidiaries during the same period. The company also announced the second interim dividend of Rs 2.5 per share in January. India is embarking on an ambitious journey to significantly enhance its nuclear power capacity, aiming to achieve 100 gigawatts by 2047. This strategic move is integral to the nation's commitment to achieving net zero carbon emissions by 2070 and ensuring a sustainable, reliable energy future. Central to this initiative is NTPC Limited, India's largest energy conglomerate, which is actively engaging in new ventures to bolster the country's nuclear energy infrastructure. One of the biggest developments in India's energy space is NTPC's nuclear power expansion. NTPC has partnered with Nuclear Power Corporation of India Limited to form a joint venture, Anushakti Vidyut Nigam Limited. This JV will develop nuclear power plants across India, aiming to boost clean energy capacity. Initial projects include Chutka Madhya Pradesh Atomic Power Project, Mahabanswara Rajasthan Atomic Power Project. These investments are crucial in meeting India's goal of achieving 100 GW of nuclear energy capacity by 2047. NTPC Green was carved out of NTPC and listed on the stock exchange as a separate entity in November 2024. The company added 550 MW of renewable capacity in the 9 months of FY25. The company's current capacity is at 3,475 MW, up from 2,761 MW on 31 December 2023. During the 3 quarters, NTPC Green generated 4,742 million units of electricity, and the company's CUF was at 22.99%, which is slightly down from 23.37% a year ago on account of lower GHI and a prolonged monsoon. Tata Power Company Limited is a publicly listed electric utility and electricity generation company based out of Mumbai and is a part of the esteemed Tata Group. The company is one of the largest power companies in India with operations across multiple states and countries around the globe. Tata Power has a total capacity of 25.6 GW, operational plus construction, of which 16.8 GW is cleaner energy, 10.1 GW of which is under construction, and an operational thermal capacity of 8.9 GW. The company has an operational transmission line of 4,633 CKM and an under construction transmission line of 2,414 CKM. The company has a customer base of over 12.6 million across the country. As of 31 December 2024, Tata Power has over 5,500 plus EV charging points across 580 plus cities and towns. The company has a clean and green capacity target of 70% by 2030, and currently the share of cleaner energy in its portfolio is at 43%. The company under its subsidiary TPREL has commissioned one of India's largest floating solar projects of 126 MWP in Omkareshwar, MP in Q3 2025. The company's other subsidiary TPTCL has partnered with Noida International Airport to supply 10.8 MW of wind power. TP Solar secured a Rs 455 crore contract to supply 300 MWP ALMM modules to Maharashtra State Power Generation Company Limited. The company, as of 31 December 2024, has an order book value of over Rs 13,500 crore. The company's solar rooftop order book value stood at Rs 827 crore at the end of the third quarter. The company has won orders of over 267 MW in the solar rooftop business in the 9 months of FY25. Tata Power has planned 2 GW of renewable power every year for the next 2 years. So far, the 3 quarters of the company has added 865 MW of renewable power and is expected to add 600 MW in Q4. The company has spent over Rs 9,000 crore on capex in 9 months of FY25, and the company expects another 10,000 crore on capex in Q4. The company has a net debt of Rs 44,706 crore as of 31 December 2024, which is up from 38,599 in the same period last year. Adani Green Energy Limited is an Indian renewable energy company headquartered in Ahmedabad. It is majority owned by the Adani Group and minority owned by Total Energies. The company has made significant progress in its renewable energy portfolio and has over 11.5 GW of renewable power, with a target to be a 50 MW powerhouse by 2030. In the last 3 quarters, the company has secured solar, wind and hybrid sites in Rajasthan and Gujarat states. The company is also actively working on Hydro-PSP pumped storage project in Maharashtra, Andhra Pradesh, Telangana, Tamil Nadu and Uttar Pradesh. During the last 9 months of FY25, the company has added 3,131 MW of greenfield projects, and the construction of the world's largest renewable plant at Khavda in Gujarat is in full swing. The plant is spread across 538 square kilometers and is designed to generate 30 GW of electricity via solar and wind. Currently, the plant has an operation capacity of a little over 2.4 GW and is expected to reach its full capacity by 2030. During the quarter, the company signed a 25-year PPA with MSEDCL to supply 5 GW of solar power. The sale of energy in the 9 months gone by has increased by over 23% to 20,108 million units. In terms of ESG parameters, during the period, the company has avoided 15.6 million tons of CO2 emissions and is expected to reach 96 million tons by 2030. Adani Green has also been ranked in the top 3 companies globally in the renewable sector by FTSE Russell. The company has also achieved 2 ESG goals during the period. It became 100% single-use plastic-free operating capacity and zero waste to landfill operating capacity. Going forward, the company has secured over 250,000 plus acres of land for solar and wind developments. Government initiatives and actions. The Indian government is actively promoting a sustainable energy future through initiatives like the National Green Hydrogen Mission, PM Kusum scheme and PM Surya Ghar Muft Bijli Yojana, aiming to boost renewable energy, enhance energy access and reduce fossil fuel dependency, aiming for 500 GW of non-fossil energy by 2030. The Ministry of New and Renewable Energy developed a national portal to encourage rooftop solar across the country, allowing residential consumers to apply for rooftop solar without waiting for DISCOM approval. The government has allocated a total capacity of 39,600 MW of domestic solar PV module manufacturing capacity to 11 companies with a total outlay of Rs 14,007 crores under the Production Linked Incentive Scheme for high efficiency solar PV modules. Manufacturing capacity totaling 7,400 MW is expected to become operational by October 2024. 16,800 MW capacity by April 2025 and a balance of 15,400 MW capacity by April 2026. The Trench 2 is expected to bring in an investment of Rs 93,041 crore. To boost the solar power installation in rural areas under Pradhan Mantri Kisan Urja Suraksha Evam Utthan Mahabhiyan PM Kusum scheme, the government has extended it till March 2026. Carbon Credit Trading Scheme 2023. The primary objective of the Carbon Credit Trading Scheme is to establish a robust platform for the trading of carbon credits. These credits represent quantified units of emission reduction, removal, or avoidance, with each credit equivalent to 1 metric ton of carbon dioxide equivalent. Some of the other significant policy changes include: number 1, Electricity Act amendments introduced competition in electricity distribution, allowing private players to enter the market. Strengthened renewable purchase obligations RPO to push discoms towards cleaner energy. Number 2, carbon taxation and sustainability push. Government is set to introduce a carbon pricing mechanism, increasing costs for fuel-heavy power producers. Number 3, PLI scheme for energy storage. Focus on promoting indigenous battery manufacturing, reducing dependency on imports. Market trends and key developments. Number 1, transition to renewable energy accelerates. Renewable energy generation in India has grown at a CAGR of 15% over the last 5 years, with solar and wind leading the way. Government initiatives such as the Production Linked Incentive Scheme and policy support for offshore wind projects have boosted investor interest. NTPC Green Energy Limited's listing has further intensified market competition, raising fresh capital for green energy expansion. Number 2, coal remains a dominant player but faces regulatory pressure. Despite the rise of renewables, coal still accounts for nearly 55% of India's electricity generation. New carbon tax proposals and stricter emission norms could impact coal-based power generation, forcing companies to invest in cleaner technology. Number 3, rise of battery storage and grid modernization. Increased investments in battery energy storage systems are driving grid stability and helping integrate intermittent renewable energy. Companies like Tata Power and Adani Energy Solutions are aggressively investing in storage projects. Number 4, electricity demand growth and discom reforms. India's electricity demand grew by 6.5% year over year, driven by industrial recovery and higher rural electrification. Distribution companies, discoms, continue to struggle with financial losses, but the new Electricity Act amendments aim to address these inefficiencies. Hydropower developments. Hydropower remains a significant component of the global renewable energy mix. Global capacity. Hydropower accounts for a substantial share of renewable electricity generation worldwide, providing reliable and flexible energy. Technological innovations. Advancements in turbine technology and pumped storage solutions have enhanced the efficiency and capacity of hydropower plants. Environmental considerations. While hydropower offers clean energy benefits, it also poses environmental challenges such as ecosystem disruption and water resource management, necessitating careful planning and sustainable practices. In summary, the global energy landscape is undergoing significant shifts, with coal usage experiencing both peaks and declines influenced by international agreements and market dynamics. India's initiatives, such as the PLI scheme for energy storage, reflect a commitment to advancing clean energy solutions. Financial performance varies across the energy sector, with renewable energy companies generally showing positive trends. Hydropower continues to play a crucial role balancing energy production with environmental stewardship. Coal sector, global trends, and India's position. Globally, coal demand remains high despite the push for cleaner energy. India, the world's second largest coal consumer, has seen fluctuating imports. While domestic production is rising, logistical issues and rising international coal prices have put pressure on power generation costs. Internationally, coal demand is expected to plateau by 2027, according to the International Energy Agency. This shift is driven by global commitments under agreements like the Paris Accord and the Powering Past Coal Alliance. However, India continues to rely on coal for baseload power with plans to modernize plants and improve efficiency. Renewable energy and hydropower expansion. Renewable energy is the game changer in India's power landscape. The country is now among the top 5 solar energy producers globally, with a cumulative capacity exceeding 85 GW. Wind energy contributes around 44 GW. Government initiatives like the PLI Production Linked Incentive Scheme for Energy Storage, launched in 2021, are further driving investment into battery storage and grid stability. Hydropower is also seeing a resurgence. New large-scale hydro projects, particularly in the Northeast and the Himalayas, aim to add 15 GW by 2030. While hydro remains a clean energy source, environmental concerns and resettlement issues pose challenges. The Indian power sector is undergoing a transformation driven by renewables, regulatory shifts, and rising electricity demand. While coal remains dominant, the focus is shifting towards sustainable energy, energy storage, and smart grid technologies. Market leaders like NTPC, Adani Green, and Tata Power are positioning themselves aggressively, while newer entrants are raising funds to scale operations. The coming quarters will be crucial in shaping the next phase of India's energy future. I hope you found this video enjoyable and informative. Please consider subscribing to our channel and do not forget to press the notification bell. It would also help us if you could like the video and share it.